All right, let's touch on your point about silver outperforming the other metals next year. Let's walk through your thesis there.
Okay, well, number one is it's regained its safe haven status this year, and the amount of silver that was purchased by the ETPs, the funds mostly were like 350 million ounces of physical silver. This is absolutely, completely, and totally unheard of. We've never had that kind of investment demand in the silver market in decades. On top of that, you had retail investment that was rather substantial. In most cases, the retail investors were paying extremely high premiums just to get their hands on physical silver. Again, this was seen before in the 2008 financial crisis, but it only lasted a few months. This time it's lasted pretty much most of the year. On top of that, you have a decrease in supply due to the health concerns of about 7% for the year. And jewelry demand was off, photography, almost anything silverware was off, but investment demand was up. I think that trend will continue. And looking out 1 year, I believe if that trend continues, and again, I believe it will, you will see a very tight silver supply for the industrial users because the investment demand will be so robust.
But the trouble with silver, it's a real asset. It's an industrial metal first. And the biggest people that use it are some of the biggest corporations in the world, like Sony, Apple, Toshiba, any battery company. And now with, the ESG, environmental social governance, which Carney took over from the Bank of England. He's taken over that for a company called Brookfield Canada. Everybody's shifting green. So silver is a green metal. And so I was really happy when Reddit at least stirred the water up, but they were messing with real companies. Toshiba, Apple, Tesla, Sony, Apple, they were messing with the end user. And the thing I know since I started a gold mine, it's 100% manipulated. They keep the price low just so it doesn't blow their operating costs out of the water. But that's coming to an end now because the consumption of silver is going up while the stockpiles are going down.
So there's a lot of theories right now, Ted, circulating about what's happening in the silver market. One of the top questions we're getting is, with the inflows moving into silver ETFs, how are they sourcing the silver?
That's an excellent question. First of all, over a 3-day period in the SLV, the big one alone, the big silver ETF, there was like 110 million ounces deposited or recorded. It wasn't physically moved because you can't move that amount of silver in that period of time. But it was in the warehouses already, and they earmarked it for ownership in the SLV. Well, we can eliminate where it didn't come from. It didn't come from a sudden burst of new mining or recycling, where your total world production is like 2.5 million ounces a day. So it didn't come from new production. It came from existing silver inventories. There's no question about that. But the real big question is who parted and by what mechanism did they release and capture this amount of silver that's already existing in the warehouses in London? And how did it come to the market? I mean, why would the sellers of this metal sell it so cheaply? The only two possible explanations I can see is that the metal was leased by one party, and that one party would have to be J.P. Morgan because they're the only ones that would control that amount of silver that's even close to being conceivable. So they, in my opinion, leased the silver to other authorized participants of the SLV, and those authorized participants did deposit the silver to meet the buying interest in the SLV. But it's a form, leasing is a form of short selling. So basically, I think the silver came in as a short sale, which means it has to be paid back one day. The only other possible alternative is that J.P. Morgan just sold it outright, okay, without leasing it to anybody else, which is the only other conceivable way it could come to the market.
Okay, so another feedback that came back to me is that there's actually no shortage of the 1,000-ounce silver bars. It's really in the smaller coins, but you're saying not so?
No, I'm saying that there's a shortage in both. We don't have to argue about the retail side, because I think every retail dealer over the last week or two has his business model has changed. His business operation has changed from finding customers to buy metal to finding metal to satisfy people that want to buy. So there's no question that the retail side is basically tapped out and hand to mouth. But I would say the same thing is true on the 1,000-ounce bar market, and it's not widely recognized. For some, in a lot of people's minds, there's this idea that silver is, that there's unlimited supplies of silver, and it's like, I don't know, falls from the sky whenever people, decide that they want to buy it. But it's highly limited. There's maybe 2 billion ounces of silver in the world, okay, in the form of 1,000-ounce bars, and between the COMEX warehouses and all the ETFs combined, something like 80% of that 2 billion ounces is already spoken for, and we can see in visible inventories.
So let me ask you this, Ted. If there is funny business in the silver industry and blatant manipulation happening, why would an investor invest in silver then if the price will not be allowed to go higher?
The answer is this. The answer is there's two kinds of manipulation. There's an upside manipulation and there's a downside manipulation. We're all familiar with upside manipulations. The Hunt brothers, coincidentally, manipulated silver up to $50 back in 1980. And there's been other instances of manipulation to the upside in the copper market by the Sumitomo trader that we referred to as Mr. 5% or whatever. When a market is manipulated up and the price is high, that's the last thing that you want to do is buy it, because a manipulation is an artificial price. So an upside manipulation creates an artificially high price, and that's the last thing you want to buy. A downside manipulation, on the other hand, which we have in force in silver, is exactly the opposite, that the price is artificially low. So that becomes the very best reason to buy silver, is because it's artificially manipulated to the downside. And we know from history that manipulations have to end someday. And one day when they do end, okay, they end abruptly and violently. And if it's an upside manipulation, then the price falls out of bed. If it's a downside manipulation like we have in COMEX silver, then the price will truly explode. You couldn't find a better reason to buy silver than because it's manipulated.